Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny, and today we're talking about victory, man. We finally hit the twos. We're within like a percent of the actual goal of PCE inflation in this freaking fight that's been going on for a ridiculous amount of time. It is time to go, and celebrate this a little bit. So we're gonna have a little drink.
And I'm going to call someone out.
Two stupid guys trade stocks.
Are we
I
having a
figured.
drink?
No, I'm joking. But I
Oh,
figured this thumbnail really encapsulates just the battle that inflation has been, Or I just wanted to look at a bunch of shirtless dudes. I don't know. You decide for yourself.
I was more on the shirtless dude team. I will say there's a little bit of what I would call Harvey Dent syndrome here. That is,
Ooh.
because he makes predictions constantly. He's wrong all the time, but then the time he's right, which eventually you have to be right if you keep on
Yeah.
calling the market's going to think. Let's not forget that Yellen said that he was going to cause turmoil and crash the entire economy with what he was doing. Throwing that out
Yeah.
there.
Oh yeah. Well, it makes good sense that it's taken a little while, but the inflation has certainly come down into the realm of much more reasonable numbers, right? And this is actually what you're going to see in the report here. These are the two numbers: headline PCE 2.6%, and the core PCE 2.9%. So both numbers are in the twos now, which is amazing.
Mm-hmm.
All right. Now, Chairman Powell has talked before in the past about how PCE is his preferred metric because rather than looking at what the cost of items on the shelf is, which is what CPI looks at, PCE reflects consumer behavior in terms of what people are spending money on. All right, so it's a better metrics. It allows the consumer who is indeed a nimble purveyor or buyer of things, I should say, a purchaser. That's the word I was looking for, to adjust for
A
cost.
buyer of things.
Yeah, buyer of things. I don't know. Tell you, I'm an idiot. We named the channel appropriately, okay? But this is just harkening back to, like I said, his favorite inflation gauge was up 2.9% for the year, 0.2% in the month, which did tick up slightly higher from the November number, which was 0.7% for the month. We have had now a little bit of a tailwind from energy, which is starting to reverse itself. I don't know if you saw, but like West Texas crude had like its best week, and I forget how long. It was like 6.5% this week. So we're
Yeah.
gonna not be benefiting from the decreasing energy prices now for a little bit. I suspect that trend has reversed itself.
I do think we're going to go back to threes for a little bit, just for a little
Yeah.
bit, and then back down. It'll be like a little hump.
Yeah, it's very possible. So this is what I was saying: the 0.1% for November, annual rate of decline from 3.2%, 12-month lowest since March 2021. So it's been a couple of years since we've seen numbers even in this realm. It was quite a long slog of high inflation rates, and hopefully we're getting past it and can officially claim victory in the not too distant future here. We're headed there. Now, including volatile food and energy costs, headline inflation also rose 0.2% for the month. 2.6% annual pace. And then, this basically is just saying, it's evidence that inflation is indeed being controlled. It's still a little bit higher than we'd like to see it be, down in 2% category. It's hard to keep up and beat it with your 2 to 3% cost of living increases that have made you fall behind over the last couple of years. So this right here is a little commentary from a market analyst, but inflation dynamics inside the metric that the Fed uses to formulate policy strongly imply that the central bank will hit its inflation target in the near term. Okay.
Would agree.
I don't know who this guy is. This will create the conditions in which it makes its policy pivot and begins a multi-year campaign in which it reduces the policy rate towards a range of 2.5% to 3%.
You don't know who Joe Brusuelas is?
Yeah, I've never heard of him before. I don't even know who
Oh,
RSM is. So
yeah. I
tell
mean,
you.
I don't know either. I'm just kidding. I was
Yeah,
gonna
it's
say.
just mouthpiece that CNBC used for this article. That's what the source of this is. Um, Data indicated that consumers are dipping into their savings. Consumer spending has remained kind of robust. I
Mm.
don't think I kept it in here, but consumer spending was actually up 0.7% for the month. Granted, it's December. I wanted to look at the seasonality of that because I would assume that savings rates typically dip in December. People tend to go out and spend above and
Yeah.
beyond what they could.
So it had the holiday rush, and it also had the effect of the buy now, pay for it later thing for December. I had just seen a holiday that, not a headline earlier. It was something around the lines of we were already at record credit card debt, but we actually had more purchases during December than we usually do. and now we're having a bigger decrease in savings than we usually do as well. So
Perfect. It's an interesting thing too. The buy now, pay later. How much of an effect that will have over time? Because they've been setting consistently records year after year for its utilization. It's become much more trendy. But how that'll make the credit card debt number track a little bit less effectively, if you will.
So, theoretically, if we all go into hundreds of thousands of credit card debt together at the exact same time, we're all fine.
Yeah.
But we all have to do it. There's a key there.
Well, this is the classic story. And this is a aside here for 20 seconds. But if you owe $10,000, you have a problem. If you owe $10 million, your bank has a problem. If your bank owes $10 billion, then the federal government has a problem.
Yeah. What's the Rich Dad Poor Dad guy?
Robert Kiyosaki.
Yeah, it came out that he was like $1 billion in debt, and then everyone's like, "Cool, this guy's an idiot." It's like, did they not read that's the whole purpose of his thing. If you're super in debt, then if you have a problem, the bank has a problem. That's his whole. Sorry, that's an aside.
Yeah,
That never make any
I know.
sense that he got hate.
It's all good. This is one other thing I wanted to highlight from this article. We're talking about prices for goods, it declines 0.2%, while prices for services rose 0.3%. This is something Powell has touched on too, saying that non-housing services sector price inflation is one of the last things to kind of decrease. And we're still seeing some growth in this service sector industry, so I'm kind of not terribly surprised by that. We have seen prices come down on these durable goods, vehicles dropping 0.4%. I put a nice chart in here of that. Have you seen this? This is the Manheim Used Vehicle Index, updated for January 2024 so far. But pretty considerable drop off now in used vehicle prices. So that's providing a solid tailwind.
That's what it should be. This was the only time in like history where regular used cars, not fancy ones, regular used cars were an appreciating asset.
Yeah, absolutely, like insanity. But we're still looking at the price we are elevated compared to pre-pandemic. Whether or not this comes back to reality, who knows? That's hard to predict. But we're trending that direction. But we look how elevated it still is, even at this current level compared to what we were paying pre-pandemic. You're talking about over 30% higher based upon this index. That's crazy. So plenty of room to go for decreasing inflation there.
I think that graph is going to mimic Tesla's stock price. Throwing it out there.
Oh, no, it's a separate video. This I wanted to show you. This is basically that service sector inflation that we talked about. This is non-housing service inflation, and currently we're at about a positive 3.4% year-over-year rate. So we're still above the 2.9 that we've got for for a core number and 2.6 for a headline number. But we are now back in the realm of getting closer to reasonable. And like I said, Powell has mentioned that this specifically is the last one. This is like the hard one to control. This is wage inflation, but not related to housing sector, which obviously boomed like crazy. Yes. So this is where they're making good progress, where we're starting to see the pace of this decrease a little bit over time. So I'm optimistic. I think the worst of inflation is behind us. And as a result of that, you're going to start seeing the probability of interest rate cuts coming from the Federal Reserve increasing more and more. This is the CME Fed Watch tool predicting what the rate cuts will look like, or most likely Fed funds rate is for the rest of the year. As we are kind of anticipating, we're looking for a cut probably in this March meeting is potential. According to this one right here, it's saying it's actually going to hold it flat, and they're going to think we're not going to get our first cut now until May, according to the CME Watch tool. But I'm thinking May. Doubt that. You think May?
I'm thinking May.
Wow. Okay.
His whole thing was you don't want to cut early. Just let it go, because I think we're going to dip back into the threes in like a couple months.
Yeah. You think the January number is going to be a little bit higher than the December number that we just received?
I do.
Okay. It's a bold prediction, man. I don't know, but it's possible. I wouldn't be terribly surprised, but I will be a little bullish here and say that we do see a 25 basis point cut in March, even though the CME Watch tool is not currently predicting that.
Okay. All right. We'll see who's right. Winner gets $1,000. Funded by you. Okay. Thanks, guys.
Get to the next one.